Hey everybody, welcome back to my channel. My name is Ben Wheeler, local real estate agent, and today I'm here with Al Nelson with Croix Mortgage, and we're going to talk about some specific loan programs. If you're going to go look for a mortgage, you are probably going to be picking one of these programs, whether it's conventional, FHA, USDA, if you qualify for a VA loan. Yep. Al does those also. We're just going to go through those a little bit. Al, I'll let you introduce yourself a little bit here, and then we'll jump right in.
Al Nelson, Croix Mortgage. Our office is in St. Croix Falls. So Polk County, we do Wisconsin and Minnesota mortgages.
When someone's shopping for a mortgage, they have a few options.
Yep.
Right? What are the most common options or that people qualify for or decide to use?
Probably the most common is your Freddie Mac, Fannie Mae. Those are considered conventional loans.
Okay.
And depending on if you're a first-time home buyer or multiple home buyer, depends on your down payment.
Sure.
First-time home buyers can do it as little as 3% down with those programs.
Unconventional.
Unconventional.
Okay.
Yep. If you've owned a home before, you have to do 5.
To qualify unconventional, let's just start there. What's the credit requirements?
You know, it's best to be upper 600s and above. What starts to happen with conventional is if your score is a little lower, they're really going to hit you harder with the interest rate.
Sure.
They have a tiered program with the interest rate.
Okay.
And the lower your score, the higher the interest rate. And then it might make more sense to do one of the government loan programs because they don't hit you so hard for that.
Okay.
So it's just, we look at all of that and figure out the best program for the borrower.
So a little better credit, 600 plus credit score.
Yeah,
what
upper
about the
6s.
Debt to income, unconventional?
Debt to income, it's best to be your back end ratio, which is all your debt plus the house payment.
Okay.
You need to be under 50% debt to income. So
Sure.
if you make $5,000 a month, your total debt with the house payment, taxes, and insurance needs to be under $2,500.
Okay.
And if your credit's a little lower, it's even going to be more strict than that. We run it through AI, an automated underwriting system that tells you if you're approved or not. And if you're not conventional, then we usually shift into a government loan, FHA, something like that.
So leading right into that then, FHA loans, what are your qualifications needed for that?
If your credit's okay, maybe closer to 700, you can stretch that debt to income up to 55, 56%.
Okay.
You can just stretch it up higher.
So you can have more debt, like an FHA loan, than you can a conventional. So if you have a little higher debt, but your credit's still good,
you can still qualify.
Okay.
And FHA, no matter, you have to do 3.5% down.
Okay.
Have to. Let's say you're doing 20% down. You're just doing more, but we have to do an FHA loan to get you to qualify. You can't get an approval any other way.
Yep.
You're still going to have mortgage insurance, and mortgage insurance is another video we can do someday.
Oh, sure, yeah.
Yeah, FHA is probably the easiest loan to qualify for. It's more lenient.
A little more forgiving?
Yeah, a little more forgiving. The rate, they're not going to hit you so hard on the interest rate with lower credit. I do a lot of FHAs because sometimes it's just the best fit.
Okay.
It's not always the best fit for the house. They're a little more strict on the condition of the house with the government loans than they are with conventional.
You're talking a lot of there's peeling paint, hand railings, anything like safety issue.
Yeah.
Government-backed ones are going to want things buttoned up.
Yeah. And it's usually nothing. If the garage roof is caving in, we're not doing a loan, any kind of loan on that house.
Right.
You have to have a good roof on any loan.
Right.
Yeah. So
even just conventional loans, it has to be safe and habitable.
Yes.
You can't have something falling in.
If there's an old barn that's tipped over, that's probably going to have to be cleaned up because there's a safety hazard there.
Okay. Yep. Yeah. That makes sense. So besides FHA, do you do USDA loans?
USDA is 100% finance. You can put a down payment down, but we do those. Yep.
A potential of a no down payment loan.
Correct.
What does that look like for qualifications go?
Debt to income's a little bit tighter on that.
Okay.
Probably the max you could see on that is about 44% on the back end.
Okay.
Debt to income, as long as credit's decent. If credit's a little lower, we might not be able to go that high on debt to income. So it's different borrowers, different.
I mean, USDA, I know I've had people ask, if that's only for like agricultural stuff.
No, it can't be agricultural.
It can't be agricultural.
Can't be.
So that is for regular residential, single family homes in a town. It would work just fine.
Can't be a duplex. Cannot.
Okay.
It cannot be income producing for the USDA. USDA not only has your debt to income ratios, it also has an income limit.
Oh, okay.
If you make more than X, you might not qualify. And I think in Polk County, it's 1 to 4 people. I should have brushed up on those numbers. Maybe 100,000.
Sure.
If you're over that with only 4 people in the house, you won't qualify.
You won't qualify, period, anyway.
Yeah, they just, it's not for that borrower.
Sure.
Yeah.
Always kind of interesting to see all
and
the
if
programs.
there's more than 4 people in the household, then that number goes up.
Sure, that makes sense. That's probably goes by their different poverty rates and whatever for the county.
Yeah, great program. The mortgage insurance is quite low on that program. I like that program over FHA if we can do it.
Sure. Well, it's probably more cost effective for the borrower to some degree.
It is.
You know, and it probably has the same home like restrictions as far as
You know, same. They go by FHA guidelines.
Right. They're going to look at the guidelines that the same FHA would be looking at. Another awesome program, which is the VA program, which a lot of people do not qualify for, but there's a fair amount of veterans that do qualify for this program, and it's a benefit for the veterans that have served our country, and it's an amazing program.
It's a great program for veterans.
I know it's no down.
You can put money down, but most do no money down. It does not have monthly mortgage insurance.
Okay.
So there is no mortgage extra payment with that, where the other loans do if you're not doing 20% down. No monthly mortgage insurance. It does have a funding fee.
Okay.
So the first time you use a VA loan, I believe it's 2.4%. So if you're doing $100,000 purchase price, your loan would be $102,400.
So that funding fee is rolled into?
It's rolled into the loan, and that's what keeps the VA program going.
Sure.
Pays them. If you're a disabled veteran, even getting just 10% disability, you don't pay that funding fee.
Oh, okay.
That's nice that they do that.
So that you can get around that funding fee if you are qualified VA disabled to...
Correct.
Okay.
Yep.
That's cool.
Which is great. They do that for veterans.
Oh, absolutely.
It's an awesome loan program. The rates are really good. They will let you stretch debt to income. I think we're doing one in the office right now, 56, 58% debt to income.
So you can have definitely a higher debt to income. Is your credit?
If you're going to stretch debt to income, you need to have a good
better
credit score.
Okay. So if you have better credit, you can kind of stretch that debt to income just a little bit more. If your credit is not so good, you're going to want to have a little less on the debt side of things to be qualified for a program like that.
I just encourage people to talk to a lender and find out. A lot of people are scared to walk in the door because they don't want to hear no. I rarely tell people no. I might say, not right now. Here's what we need to do to get you ready to buy.
Right. And there could be always steps, right? And people might want to get into a house like right away, but they might have to fix their credit, or maybe they have no credit at all.
We have that too.
And they have to develop some credit. They have to go get a credit card from their bank that has like just a $500 limit, and you just pay it off and you try to build your credit that way.
Yeah, it's possible to do a no credit loan. We can do those. We have to build alternative credit. Do you pay your car insurance? We have to prove you make payments and show that you've paid them on time. Maybe it's insurance. Maybe it's something that doesn't report to credit that you make monthly payments on it. It has to be monthly payments.
Cell phone bill?
Cell phone bill can be one of them.
Oh, wow. Yeah. Interesting. Oh, did not know that. Okay.
So kids, get off your parents' cell phone. No, I'm kidding.
get your own.
Get your own. Cell phone bill is a good one.
Okay. Very good loan programs. There's lots of loan programs. Best thing to do, reach out to a local lender. If you need any recommendations on a local lender, obviously I'm going to help you out with that. And I'll put some information below in the description with Al's contact information. He's located right in St. Croix Falls. So easy to get to, and he does answer his phone. So
I do.
He's always working, so that's a good thing. You're going to want someone who's going to be looking out for you, obviously, but then who isn't going to drop the ball, not help you out. So with that, make sure you get your pre-approvals. Make sure you look at all the different loan programs your lender has to offer. Make sure you subscribe, like, and leave a comment. Take care.
Thank you.